What's up, YouTube? Don with The Don Franz Show. And if you are catching this today, I hope you are having an awesome Labor Day weekend. Remember, I usually go live on Sundays 1 hour after the futures open, but that's because I like to go live before the stock market opens the following day. So if you are catching this today, we are doing that all tomorrow. Get your popcorn ready, especially if you're in the mentor group. You know, we got we're going to have the stream, the Homer stream, then the mentorship stream. So everybody should be rocking there. And if you are a YouTube member, the giveaway that's coming, you guys will be a part of that. You will join. Let's get into it. This one won't be a 5-minute video, I don't think. You should know by the time slot already. I'm not sure how I'm going to record this one, but we're going to go over everything we've been seeing as far as the Nasdaq goes. And if you're a follower of mine, you've been watching my videos, you guys know I pulled up Flow Algo, and I've been talking about this. I've been saying there's been some unusual buying on the options contract. I mean, crazy. That's what's fueled this this move up in tech, and we didn't know it until now, as you can see by the headlines here. And then there's two articles I'm going to pull up. We're going to kind of scan through. I'm going to have both these links in the description down below, so you guys can read them too. I don't think right now anything is certain yet. They've refused to comment. SoftBank is a Japanese conglomerate, and they've just been buying it all up. So, like you guys saw me pulling in a couple previous videos, mentorship, you guys have seen me talk about this a few times on the nightly streams. What is going on? Because usually options call volume, you know, I used to say like, hey, if it's above 500,000 worth, maybe 750,000, it's probably not a hedge. We're probably getting somewhere. Lately, we've been seeing them firing off in the millions, like it's just chump change. All right, and that seemed very, very weird, very bullish. It happens to be in the some of the companies I've been in. If you guys been, I know you guys don't copy me, but maybe you agree with what I'm saying. And you guys know I've been in Amazon and Tesla, which happens to be two of the big ones as well. And what this company's doing is they have billions in the actual equities, but they're buying a crazy amount of call options. So to understand all this, if you're new to this and you're just searching this and you found my video, you're not a follower of mine, everything is supply and demand. You have stocks on their own, tech, no matter what the sector. More buyers there is, it goes up. More sellers, it goes down. When there is a balance or no one at all, still balanced, that's when you see things kind of go sideways. You see the little back and forth game. Options, they are actually right there. There's the underlying that drives them. They're not connected to the stock market. They're also supply and demand that of themselves. And so when you buy a call, to keep the math simple, it's at $90. The underlying's at $90. You buy a $100 strike price. That is saying I want to buy a contract. I want to buy 100 of those shares at $100. Now, why does that make sense right now? If it's at $90, it'd be cheaper just to go buy it. It's going to cost a whole lot less to buy a contract for 100. You're assuming it's going to go above 100, right? So if that contract itself costs $10, which is times 100, it'll cost you $1,000. If it costs you $10, right? You need that to actually go up to 110 just to break even, right? Because you got to take the it's per share basis. So this might be a little complicated. I'm giving you the TLDR. I have a course down below. It goes over everything. I have a trading suite right now. Options is completely done, where you will understand this in full detail. But again, you have the stock right now at 90. You have the coupon you just paid $10 for, rated per share times 100. So you technically have this thing for 110 bucks. Now, if that ticker at expiration, it will say a month from now, it is not above, if it is at 110 or below, you wasted your money, you lost your $1,000. But for every dollar it is above, it's $100 for you. So you not only want it to go to your strike price, you want it to go past. You want to go past what you paid for and above it if you're going to ride that thing to expiration. Otherwise, they evaporate. They go to zero. As you own this options contract, what makes them so dangerous is they will go to 1 or 0. They're racing for one of those, and you will see them go up and go down. And as we get closer to the end, very violently. So you need to understand that to understand what this company is doing, because they have a bunch of call options while billions of dollars in these actual stocks themselves. Now, I'm trying to read around, and help me in the comments down below if you've been researching this as well, because doesn't seem like anybody really knows the actual definition or order of things that are going on. I've seen some say they've bought the stocks and then they bought the calls and unloaded the shares. It would make so much more sense to actually buy all the options contracts, then throw some billions in the and the actual tickers themselves play market maker. Run that thing up, collect the money on those calls, sell them, and then unload the shares. We've had a crazy sell-off, right? This technically is this right here, I think, is actually a correction. Now, in my last video, I was talked about, we got the dip here. We bounced out of this zone. So even the long positions I'm in, I'm currently up until we open. One of them happens to be Tesla, so we'll see. But I'm kind of looking out for a lower high, or do we just keep running, we make a higher high? So ignore the paint lines for now. That's what that's from. That's from a previous video. But let's see. Did we actually correct ourselves? I think 10% or more is a correction. So we officially, with that wick down, tagged that zone. It might be 11%, but we're at the correction. A crash, I think, the actual definition is 20%. So we're at the full-blown correction. Is this a bounce? And we've talked about this, like I said in my previous video. Is this, because we're on a weekly uptrend, we're in a nice little channel, and we just tagged the bottom of that channel. Is that all this is? Did this Nasdaq whale, SoftBank, did they buy it all back, or are they the ones starting to unload their position? Because if that's the case, and they had billions in there, and they're going to jack around with that, because you can move the market, especially with those kind of numbers. Let's see, Nasdaq whale, that's what they're calling them, bought billions of dollars in individual stock options in big tech companies over the past month, driving up volumes and contributing to the trading frenzy. A lot of traders will see this volume, and they think someone knows something we don't. We got to get on this ride. Let's go. Now that definitely played a factor into why I'm in it, but I'm more of a the trend is your friend until it's not. Keep it very simple, no BS approach to it. I understand how supply and demand works, so I've been on this train. I've made tons of money from it. So now the question is, are we still bullish? We're in this awkward spot of, they really need to show us their cards next before we make our next move. We bought the dip. Question is, where's that going right now? So right now is the time. If you're an emotional person and you're freaking out, which one should I gotta do? Do I gotta buy it all? Do I gotta sell it all? If you're that person, pump the brakes, settle down. I can't give medical advice, but chill out, right? And now's not the time to be hysterical, because if someone's playing around the market with this amount of money, it's making these kind of moves. You saw the volatility get bought right back up, which means even those guys are thinking, hey, something's up here. The something's up situation, usually where a lot of people lose. You're going to make a ton of money and think you are a genius, in which you'll probably blow it later. Or B, you'll just lose a bunch of money right up front and you'll call stocks gambling. Because you're now choosing to gamble by jumping in the midst of a frenzy, thinking you're going to nail this thing down right. So this is the time to pump the brakes, sit on your hands, maybe be a little more cash than you are in a position, because you got just a couple days, right? A few days, we'll probably know a little bit more. Tuesday, I'm pretty excited to see how this all shakes out. And we'll jump on board. You don't need to be the first one on the train. You just need to be on the train when it leaves the station. So they declined to comment. You're going to see this a lot on all these. Financial Times story that quoted unnamed sources who said it was buying equity derivatives on a massive scale. We've seen this before. They have a $100 billion vision fund. That's what they're doing this all with. But here's some of their name. Nasdaq, right? Apple, Tesla, Zoom, Nvidia. Amazon should be in here somewhere. Here's Amazon. Wall Street Journal, SoftBank had made regulatory filings showing it bought nearly $4 billion in shares of Amazon, Microsoft, Netflix, plus a stake in Tesla. And if you guys have seen, all of those really popped up. We're actually going to pull up a chart. Something I don't use is volume, but I want to see just how much of this is kind of taking place, and if that gives us any clue. We'll likely see a volume spike in all this, but even then, who's selling? Is it everyone else, or is it these guys in anticipation that these guys are going to unload, so they want to get out first? They don't like the volatility coming up. There's a story to be told here. It'll be very clear later, and you're going to think I should have known, so be careful with that. See, they quoted a source saying that SoftBank spent roughly $4 billion buying call options tied to its stock holdings, but also in other names. Now remember this: $4 billion in call options. Remember what I just told you. It's times 100. So $4 billion in an option is so much more than $4 billion in the actual shares, right? At that point, you are controlling a lot more. And it would, I can give you a blanket statement. I can shout out a huge number and really get you excited. I'm not here to play on your emotions, though. Just know that's a lot more. If you want, pick any one of these names, go to an options contract, find something out of the money. You'll see it'll cost a couple thousand. You'll control your deltas, which is how many shares you're actually controlling of that contract. You'll see we'll say it's a 40 delta. It'll cost $1,000. You spent $1,000 to control 40 shares. How much do those 40 shares cost? And that's where your math is going to take place. Because you'll take that. How much does 4 billion cost in that in shares, and then how many options contracts could you buy for 4 billion on that one strike, and then how many shares you're controlling. Take that and take that times your deltas, because your deltas are rated per share basis, so they are soft deltas when you are in an options contract, hard deltas when you're actually in shares. You can look at your whole portfolio just by the deltas and know how many shares you're controlling of each one. Again, if none of that makes sense to you guys, I do have a full-blown options course. You should know the deltas, or the Greeks, inside and out before you even take place in options. There's many strategies and even more ways to blow your account with it. So like I tell everybody, you have all the time in the world to blow your account. Do that later, but understand options first before you jump in this. But if you're reading all this and you're curious what is going on, that's what I'm trying to help you out here. So we know they're trading some big banks right here. The stock market activity was credited, so they do have to remain zero delta. So as they're buying things up, everyone else has to buy shares to kind of hedge against that position. So everyone who was going against this SoftBank conglomerate now has to hedge their positions. So that's what also causes either hedging or short covering, or just buying in general to keep up. It's just a trip to the casino. If they're supposed to be an investment company taking a long-term horizon, then trying to juice your short-term return through options, you've turned into a hedge fund. They're starting to jack around, and there's been some rumors about this conglomerate, about how they handle things and how good they actually are. And so that's what kind of makes me nervous, like what is going on, because what they say they are and what they're doing, just like they say, are two different things. So here's one more I'll have in there. Why it rallied. They bought billions worth of U.S. equity derivatives in a series of trades that stoked the fevered rally, not federal, in a big tech stocks before the sharp pullback on Thursday and Friday. Man, sometimes I read, sometimes I don't. They've been snapping up options in big tech during the last month in huge amounts. One banker described it as a dangerous bet. It's a lot of money, and you're going to make a lot or lose a lot. There's almost no in between. Everyone's saying there's just no one. The flow is huge. You guys have specifically heard me say that. Like I said in my previous video, go back and watch some of my last couple streams. I literally brought this up and said, what is going on? Someone's thinking something's about to be huge here. So definitely all eyes should have been on this. You probably should have caught this. If you didn't catch this, you're probably new. And these are some things that can sneak up on you if you don't know what you're looking for. This is also why I say careful with all these YouTubers. They're popping up all over the place as far as how to trade goes. And they've been trading a year or two, and they're not catching things like this. They're really good at the VWAP. That's that. Maybe the Bollinger Bands. Cool, if it stays inside the 3 lines, I can trade it. I can do it. No hard hit to them or anything like that. No hard feelings either. You're just new, so be careful. Because just because 3 people will say something does not make that a fact. It just makes 3 people probably wrong. So I'm going to end this here, guys. Read these articles. If you found any more, let me know in the comments down below. What do you think is going on? And do you think they are just kidding about the whole ending here? We're going to pull up the volume. But what do you think is going on? Do you guys think they're the ones unloading shares and causing this sell-off? Or do you think rumors started to come about and now people are unloading? Because once that company does unload the billions worth of shares, this thing could take a decent hit. So is this the beginning, and then they unload their shares, we take another hit, actually creating a crash? 30% would bring us right down to here. I already had this pulled up here, just looking at this this last zone right here. And now looking at this, do we actually get that stock market crash? Does it land us right here for the dip buy? And we get a full-blown, I would call that a correction. You can call that a crash, but I'd say after a move like this, I think we're correcting back to normal, although by definition that will be considered a crash. And it's 2020, why not have 2 crashes in 1 year, right? I mean, what else would you expect? I'm just looking around the corner for zombies. What's this? Indicators. How do you add volume? Volume. If you're an indicators person, I'm not. Look at that volume spike. Like I said, that really only tells us a couple things. It tells us everyone else got out before SoftBank decides to unload, or SoftBank unloaded some shares. Let's check out Amazon. Some decent volume. Definitely a volume spike. But to anybody looking at this thinking that shows them anything, that shows panic. That shows sell-off. That's what happens. There was some volume behind this. It wasn't just no one was buying, bidless B, so it all just completely sold off. There was some definitely some volume behind this sell-off. We already know the answer to Tesla. Hang on, let me show you. So nothing really giving it away here. The after hour sell-off was they're not in the S&P 500. Let's check out Microsoft. Alright, so nothing crazy. Nothing out of the ordinary, but we definitely see in the actual tech itself a volume spike. So now I will end it here. Let me know down below again. Are you guys researching this? Have you found anything? Did I miss anything? Right now it kind of seems all up in the air, speculative. We caught them with the red hand, but we don't know what's going on with them yet. It's kind of where I found things to be. Again, let me know down below, and I will see you guys again tomorrow. Get your popcorn ready. We can get our stream on.